Time now for the word on Wall Street. Top investors watching your money. Joining me now, Headquartered Walsh, Asset Management President and Chief Investment Officer, Kevin Mahn. Also with me is Breen Capital Management Director of Research, Christopher Marinac. Kevin, we're going to start with you this morning. Good to see you. We're going to take a look at futures. Yeah, Dow is, we're down 87 points right now. S&P are ticking higher. All three major indices falling Friday over weakness in tech and worries about consumer spending. Now, the Dow exceeded losses for the week. The S&P 500, the NASDAQ finishing higher for a third straight week. And they were focusing this morning on SanDisk. This stock is actually moving higher. It's up almost 5%. The chipmaker topped last week's gains. Commerce Secretary Lutnick warned Apple, do not buy chips from China. And that gave a boost to American memory companies. And investors are also keeping a focus on the consumer. Retailers coming out this week for the second quarter include Walmart, Target, Home Depot, Lowe's, all on deck. A lot to look ahead to. What are you watching?
Yeah, I would start by saying we're coming off a 3-week winning streak for the S&P 500. However, I think we're headed into more short-term bouts of volatility, and investors are going to need to continue to climb that proverbial wall of worry, whether it's concerns over AI spending, whether it's concerns over the expiration of the ceasefire between the U.S. and Iran, higher oil prices, what Chair Warsh is going to do with these task forces, and then, of course, the midterm elections ahead. But investors should realize that trying to time the market, Cheryl, is an exercise in futility. You need to stay invested in accordance with your risk tolerance. Look, we looked at the last 20 years worth of data, and what we found is that over those last 20 years, had you just missed out on the 10 best days in the market, your returns would have cut in half.
And Chris, oh, go ahead.
Go ahead. I don't know when those best days are going to be, but if you're on the sidelines, you're going to miss out on those days.
Well, yeah, but I think some volatility, you know, Kevin, you mentioned this in some of your research, that volatility is certainly on deck. And look, I mean, especially considering where we're at in the calendar year, you could potentially see a bit of a pullback in the markets for the month of September. But Christopher, to you, because you're still bullish on the U.S. economy, and I want to get a follow on that, because basically if you look at retail sales that we got on Friday, they were weak. But then you've also got somebody like Visa. Visa's coming out and saying that Americans are spending, you know, double-digit growth. What side of that debate are you on right now, Christopher?
I think the economy continues to move forward. I think we have a lot of strength in the commercial sector. I think it is going to be mixed in the consumer side. I still think for certain segments of the population, we are spending very well, and that's what Visa's telling you. I also think the payback behavior has been quite positive. We haven't seen any spikes of charge-offs or past dues. It was a very clean second quarter for all the financial institutions, and I think that still bodes well for the second half of the year.
Kevin, I want to pivot back to something we were talking about in the break, because I know that you like Alphabet, and I want to get your take on this, because there's a front page story. It's exclusive. It's data that's been crunched by the Wall Street Journal, and it's about AI spending. The headline, why big tech's AI spending is $3 trillion higher than it seems. And they say that there's a lot of the spending that has not been reported by these companies in their quarterly reports, and Alphabet is the biggest story here in this particular piece in the Journal about off-balance sheet obligations.
Yes.
$3 trillion.
Yeah.
That's a large number, Kevin.
It is. It is. I still think Alphabet is one of the best software plays within the entire AI ecosystem, because they're spending money in the right places. Look what they're doing with the Gemini search capabilities. Look what they're doing with content moderation for YouTube. And, of course, autonomous vehicles with Waymo. I just came back from a business trip in Phoenix, and what I saw was that roughly, this is a non-scientific study, but 1 in every 5 cars was a Waymo. So the way that they're actually spending to improve their bottom line using AI seems appropriate to me. But some companies are spending too much, other companies are spending too little, and the manner in which they're conducting this financing, whether it's through equity or bond financing, should be carefully studied by investors before leaning too much into that software space. Look to the industrial names, the infrastructure plays, the cooling companies, the power solutions, and the data centers, despite the NIMBY movement for other growth opportunities.
No, it all kind of flows together, to your point, Kevin, and they look at Alphabet, Amazon, Meta, and Microsoft. So, Christopher, I want to talk about the economy and the consumer again with you, because taking a look at yields right now as we wait for the minutes from the Federal Reserve, those July minutes coming out on Wednesday. You know, this is going to give investors not just greater insight into the rate path ahead, which a 69% chance the Fed holds rates steady for September, but you had that unexpected drop in July retail sales. We lost 0.6% month over over month. And August consumer sentiment dropped to 51 points, down over 7% from July. So, Christopher, I know that the economy and the consumer, that's 75% of the economy. But what did that retail sales data say to you on Friday? And how do you kind of parse that with the fact that we're getting all these big names coming out this week? Walmart in particular, I think, could really, move the markets.
So I'm watching the 2-year Treasury yield. It's been about 50 or so basis points above Fed funds. I think that's been consistent for a while. If anything, it's backed off. I think the market is telling you that there is a path to the Fed doing nothing, which is part of your question, I think. I think that the retail sales put a little bit of a damper on the concerns of too hot of an economy causing the Fed or forcing the Fed to make a move. I think we have a path where the Fed does nothing, and I think that's what the retail sales are helping us get there. We still have data in the weeks ahead that will assist on what the Fed decides in mid-September. But I think we're in a good point here.
Kevin, real quick on the same topic.
Yes.
We had Ryan Payne on the program. He's with us for the 3 hours, but he said he thinks you are going to eventually get a rate hike because of the inflation story from the Fed, but he doesn't think that happens before the midterms. Your thoughts?
Yeah, I don't think the Fed needs to do anything at this point in time. Unemployment rate at 4.1%. Inflation moderating, not back to the level that they prefer, but continuing to moderate. And of course, what we see with the economy right now, the current Atlanta GDP nowcast for the third quarter, 4.3%. I think that comes back, but that's not a situation where the Fed needs to step in and cut rates. And I don't believe if inflation continues to moderate, they need to step in and raise interest rates anyway, because the bond market is doing the work for them right now.
There you go. Kevin Mahn, Christopher Marinac, it's great to have you both. Thanks for joining me.
My pleasure.